Yo, what is going on, guys? Mo here. Welcome back to another video. Today, guys, we're going to be taking a look at how to stop missing these big moves in the market. As you guys know, the markets recently have been like incredible. Okay, 100 pip moves, 200 pip moves, 500 pip moves on literally gold in a day. It's crazy. So in these type of market conditions, there's very volatile moves, and you can either really capitalize on those trades and those moves and get into some beautiful trades and be on the profitable side, or you are going to end up missing a lot of those trades because the market pretty much is just simply not consolidating. It's just trending in one direction. And obviously this is one of the best market conditions that we could possibly be in, just as long as we make sure that we're actually in a trade. Now, before I get started, guys, really quickly, as you guys know, end of March, the big announcement is coming in regards to something that we've been working on. So what I want you guys to do is make sure to head on to our Instagram page. Make sure that you're following us there, because once in a while, you know, we're doing giveaways there. We're posting a lot of valuable content there. As well as that, you're going to be up to date in the thing that we're going to be releasing very soon at the end of the month. So make sure you stay tuned for that. Lastly, then, feel free to join our free Discord link down in the description below that. The first link, that's the Discord server. You can join it for free. And yeah, with that being said, let's get straight into the video. So actually, this was a trade that we were able to catch today. Okay, pop myself up here. So this is one of the trades that we were actually able to catch today. Okay, and I sent in this chart analysis, which I'll show you right there on the screen, and I'll show you my MT4 screenshot as well of that trade. It was a beautiful trade. I'm going to show you kind of my analysis behind it. So as you guys can see right here, there's no need to explain the market structure. It's clearly bearish. It's clearly to the downside. And for me, before I look to obviously look for any more sells, especially since we are very low into this whole trading range, you know, usually I'm looking to sell at like only premium pricing. I was looking at my next point of interest, and for me, I'm able to look for sells up until this weekly demand right here. So anywhere, as long as I'm up here, I can look for sells. If I reach here, then I won't be looking for sells anymore, in the fear of that price potentially is going to reject and pull back up more, you know, tap into these higher supply areas before continuing to the downside, or, you know, completely just making a reversal. Whatever it is, I'm only simply looking to sell to a major demand, you know, and buy to a major supply. That's all I'm doing. You know, I'm trading the zones. That's all I'm simply doing. So I see that, and then I go down to my 1 hour time frame, and I kind of can see that, you know, the Monday. Okay, so today was the Monday. We opened up. Okay, 7th of March today. We opened up bearish. Boom. We ended up breaking structure. Okay, so you can see the structure as we go through. Okay, structure's clearly been broken. Okay, lower low. Break, lower low created, perfect, and another lower low being created. Now what do I see right here? Really quickly, what we can clearly see is we have an imbalance right here that I would like to get filled in, which it did. Okay, I'm gonna change the opacity to this really just a little bit lower. And we also can see that we have this institutional candle right here. I can simply mark out this whole zone. Okay, but for me, as you guys understand, because I like to keep my entries very tight, and I'm very aggressive with my entries, because I'm trying to get obviously the best risk to reward as possible. I was able to, you know, I'm usually looking at simply just entering off the body, okay, and also placing my stop loss right above the body close as well. In this scenario, you could have placed it just above the wick because it's only like an extra 1 to 2 pips, but it really depends on, you know, your risk appetite, and if you kind of want to see higher risk to reward, if you want to risk it there or not. This is kind of what I was looking at. I was also looking at the 30-minute time frame and the 15-minute time frame. I came to a realization that those time frames as well have institutional candles, but as you can see, I opted with the higher time frame point of interest. Usually I opt with the higher time frame point of interest because just as what would have happened right here, if I was looking to enter from the 15-minute time frame point of interest, boom, it would have missed me, and I would have missed this whole beautiful move down to the downside. We also had, you know, the imbalance in here, which we didn't fully fill in, okay, but we somewhat tapped in, okay, into that inefficient price action. And same with the 30-minute time frame right here. Look, we simply didn't come all the way up to the open. We simply came up to like half of the wick and just bounced down. So for me, the 1 hour was where I looked to take my entry. Okay, so boom, straight right here, I sold off. Now, as you guys know, another one of the confirmations that I was looking at the time, okay, that really gave me the that really gave me extra confirmation was after the close of this bearish candle right here. Okay, this was my first entry. As you guys know, this was my first entry. It was clear 1 hour. You know, we had a break of structure, we had the fib. Okay, I'm not going to take you through all my confirmations. Pretty much at this point you should understand most of these things by, you know, watching that course and by also watching the other YouTube videos. You should have a fair good understanding of all these other confirmations. Okay, so we have, you know, the fib, we tapped into the 786 level right here. Okay, and we reacted. Once we got the close right here, you guys know I love to use the order flow footprints, okay, to check for confirmations. So I bring it up right here. So here I am, I simply just pulled up the order flow footprints. And for anyone that doesn't understand what the order flow footprints, it's simply like all we use the order flow footprints is to look at future contracts. You know, that's all we're using it for. So like 6B, okay, that's the GBP future. And because, okay, the Forex currencies and the futures are very highly correlated. I'm not sure what the correlation is. I think it's like 96 or 98% correlation. Okay, very highly correlated. We're able to use, okay, and we're able to analyze the order flow, okay, of the futures, and in turn we're able to apply that to our Forex pairs as well. Okay, basically all this tells me is how many contracts are there on the bid and ask side. Okay, and we're able to like understand the kind of the psychology and the behavior of what's happening by these orders and contracts being placed. Okay, and it tells us basically a story. So it's like basically uncovering a candle, you know, removing all the close of the candle and being able to see exactly what's happening inside that candle. So really quickly, one of the confirmations that we're able to see, as you guys know, one of the things that we like to look at is stop and volume right here. So the minute I seen that there was stop and volume, okay, and selling pressure was really increasing. Okay, as you can see, 326 right here. Okay, very strong stop and volume. And after it appeared, okay, after this bullish candle, now this is the bullish candle, this is the 10-minute bullish candle that we were simply looking at. Okay, right there. Okay, so that 10-minute candle is this one. Okay, oops, I literally pulled up the wrong one. Okay, so that 10-minute candle is this one right here. Bearish engulfing candle, we can see stacked selling imbalances right here. Okay, stacked selling imbalances, this is a red POC, so this is a bearish POC. And we also, as we pulled up, okay, we tapped into our VWAP line and we basically sold off right here. Okay, so there was not much order flow confirmation for me. There was kind of no seller's trap right here or any of that stuff. Don't know why my footprint is glitching right here. There was none of that, but literally the fact that we had the stop and volume, okay, the fact that we had the stop and volume up here. My software loves to glitch here and there. It's because I'm recording, so sometimes it becomes a bit slow. Anyways, it's because we had that stopping volume right at the top right here. Okay, I was able to spot some selling imbalances, you know, the red POC, and the fact that we are at the VWAP line. These are more than enough confirmations, because remember, I have a fairly solid trade built off of price action either way. I don't simply just trade the footprints alone. So with that, I was able to, you know, kind of add extra confirmation. So that was kind of all what I was looking at from an order flow perspective anyways. Boom, we got into the trade. Price broke structure, it sold off. Now, re-entries, really quickly. If you missed this right here, let's say you were going for the 30-minute institutional candle, okay, and you ended up missing the trade, and you don't want to miss out on this beautiful trade, okay? You expect a nice drop, which exactly happened, but you don't want to miss out on this trade. We use the replay tool real quickly, and okay, so what do we have right here? We look at the 5-minute time frame, and boom. So we have an institutional candle right here. We got a bearish engulfing candle. One of the first things you could potentially look for is a snare and bone setup. Snare and bone setup is not something I usually discuss on YouTube, but let's just go over something that I do discuss. The scenario number 2 setup. Okay, everyone like looks at this one. This is a fairly simple setup. Institutional candle gets created, bearish engulfing candle, we get the break of structure. Break of structure is very important, okay? And I'm trying to go through this as quickly as possible, but also by making sense, okay? So we break structure right here. You can see that low got broken through, and now we simply look for a pullback, and this is where I look to sell. So look for a pullback, boom, we tap in, open of the institutional candle, that's where I look to sell. That's my second position, okay? Let's say I missed that position. Now your stop loss right here would have been a bit higher, and your risk to reward is kind of only 6-1, which is still fairly decent, but it wouldn't have been as nice of an entry as the other one. Let's say you missed that entry, you know, and we got another break of structure right here, so that's totally fine. We got another break of structure, so now what I can do is I can look for another area of supply to basically sell from. Okay, another institutional candle. For me, from the 5-minute perspective, nothing much. 10 minutes. potentially this one right here, 15 minutes. We had this like scenario number 1 set up right here. Okay, or you could also look at the 1 minute, which is the one that caught my eye. Okay, so we have this one. This was kind of the origin of the sell-off here, and this was our institutional candle. This is where I would look for my re-entry. Okay, and as you can see, price came down, broke structure. Okay, and we had also these internal highs right here that kind of acted as liquidity to sponsor that move down for us. And we also had this one as well, and we also had imbalances to fill in. So you can see plenty confirmations. Okay, price to come back up here one more time, and we wait for price to come back up. Boom, tops. This is where my entry. That's 3 entries. Okay, so if you missed that first one, that initial one right here, no worries, you could have gotten in on the second entry right there. If you missed that one, no worries, you could have gotten in a third entry here. If you missed the third entry at this point, just say bye-bye. It is what it is, because obviously, yeah, price just absolutely got, you know, it just melted. Obviously, you could have entered potentially on like, you know, one of these pullbacks right here. You know, there was some more potentially here, or like, I don't know, maybe potentially here. But for me, you know, once we kind of get that breakout to the downside and we moved a fair bit away from our original higher time frame point of interest, then I'm not really looking to, I'm not really interested in getting into any more entries, since I don't know if price is going to make a big move. Because if we kind of take a look at usually the average amount that price would move, you know, would be like 50 to 60 pips per day. You know, that's kind of the size of the ranges. But obviously, since the market is very volatile lately, you know, we can really capitalize on those 100 pip moves, etc. So the risk to reward that I was able to capture on this trade, obviously I only got into 2 entries. Okay, so my 2 entries were the 5-minute one, as I showed you here. That was it. And I also got the one right at the top right here. Okay, I didn't catch the 1 minute time frame one. I simply just didn't see it until it was too late. But yeah, I was able to stack 2 entries there. And the risk to reward on this trade was absolutely beautiful. Now, I did not hold all the way. I took profit. Okay, because I was happy with the profit. That was a 24-hour trade, and I literally took profit right here. Okay, so just as this was at its low, okay, just as this kind of was at its low, for me, you know, we were kind of, New York was slowing down, you know, kind of ended the New York session. So for me, I was just simply happy to get out of my trade then. Okay, so that's a simple way to get into re-entries and make sure you're not missing those trades. Okay, you can always jump down to the lower time frames and try to spot these lower time frame institutional candles, but always make sure you have a very solid trade built on the higher time frame. You have very solid understanding of the market structure, and you also have a fairly solid understanding of the order flow, you know, what's kind of going on behind the scenes, because it tells you a lot, guys. Okay, so with that being said, hopefully you guys gain value from this video. If you haven't already, please drop a like and subscribe, helps us a lot. But yeah, with that being said, I appreciate every single one of you for watching the video through to the end, and I'll catch you on the next video. Have an amazing day. Bye bye.